US stocks hit fresh record highs overnight after US retail sales beat forecasts. Australia's unemployment rate unexpectedly jumps. New Zealand's inflation rate is set to rise in the June quarter, and Japan's exports drop again. That's coming up in our 5 Things in 5 Minutes on Friday, July the 18th. And then in our deep dive interview, ANZ Commodities strategist Soni Kumari unravels a surge in the price of platinum.
Sharp price rise in 30% in just 1 month and more than 50% so far, I think makes us cautious that there could be some profit booking at this level.
But first, in 5 and 5 with ANZ, US retail sales rose 0.6% in June from May, which was better than expected. The S&P 500 and the Nasdaq both rose to fresh record highs, and the US dollar jumped. But ANZ head of G3 Economics, Brian Martin, says the trend for the June quarter wasn't quite as healthy.
So there was some relief from the data that the US consumer is not headed into a sharp downturn in terms of spending in the immediate future. However, when you look at the data on a trend basis, so if we take Q2 as a whole, retail sales growth on a control measure did slow down during the second quarter. 3-month average for Q2 was 0.17% month on month, less than half the level of 0.4% during the first quarter of this year. So I think the data, whilst they can bump around on a month-to-month basis, are consistent with the view that elevated uncertainty around tariffs, around government expenditure, is weighing on consumer expenditure.
As of 4 a.m. Sydney-Melbourne time, the S&P 500 was up 0.5%. The 10-year US Treasury yield up 1 basis point at 4.46%, and the 2-year up 3 points to 3.92%. Gold fell 0.5% to $3,341 an ounce, while West Texas Intermediate oil futures rose 1.5% to $67.38 a barrel. The US dollar index up 0.4%. The Aussie dollar down a bit more than that at 0.7% at 64.85 US cents after those weak employment numbers. And the Kiwi was down 0.3% at 59.26 US cents. Number 2, Australia's unemployment rate unexpectedly rose to 4.3% in June, against expectations for it to be flat at 4.1%. Employment rose by 2,000 against expectations of a 20,000 rise. ANZ economist Aaron Luck says there was statistical noise as well as the softer signal in the data.
So the labour force survey is actually done on 8 rotation groups. So each month, 1 rotation group would get rotated out and then 1 new group would come in. What happened this month was that the outgoing group had an unemployment rate of 3.9%, while the incoming group was a bit high at 4.6%. So that created a bit of noise in the data. But we do think there's a bit of signal in what the data is saying as well.
Number 3, Aaron says the result supports ANZ researchers' view that the Reserve Bank of Australia will cut rates by 25 basis points next month as part of a shallow easing cycle.
More recently, in the July post-meeting statement, they did describe the labour market as strong, but just given today's results, we do expect the RBA to note that easing in the labour market when they release their statement of monetary policy next month. Look, overall, we don't really think that the labour market is going to see a sustained easing. Our own ANZ Indeed job ads are still elevated, so we don't really think that the unemployment rate we're going to go up much higher from here.
Number 4, ANZ Research has upgraded its New Zealand inflation forecast for the June quarter to 2.9% from a year ago because of strong food price inflation in June. That's close to the top of the Reserve Bank's 1 to 3% target band. ANZ senior economist Miles Workman says the lift is due to higher and volatile tradables prices, meaning an August rate cut is still on the cards.
The Reserve Bank will certainly need to balance any upside surprise in the CPI data against the signal that we are seeing in the high-frequency data, and that's a signal that's ultimately suggesting that the New Zealand recovery is running out of puff somewhat, and that's certainly representing a downside risk to medium-term inflation, despite the fact that the near-term inflation data looks like it could be a little bit stronger than their forecast. But we do need to remember that the Reserve Bank signalled pretty clearly back in July that if capacity pressures in the economy evolve broadly in line with their expectation come August, then they are likely to pull the trigger on a cut in that meeting.
Number 5, Japan's exports fell 0.5% in June, the second decline in a row. ANZ FX analyst Felix Ryan says the fall was led by car and steel shipments.
And when we do a country-by-country breakdown, we do see that exports to the US have been falling again. They're now down over 11% year over year. Again, that's due to the fall there in exports of autos and shipments too. So there is a risk that if this continues in terms of weaker exports, we will see this weigh on Japan's headline GDP. That is, of course, a risk in terms of the Bank of Japan's growth forecast and outlook there in terms of rate hikes. At the moment, we're still seeing only one more rate hike this year from the BOJ in October, 25 basis points.
Felix Ryan there. Now, in our deep dive interview, ANZ Commodities strategist Soni Kumari explains what caused platinum prices to jump 30% in June and be up about 50% so far this year.
Platinum prices were undervalued for a long time despite a sustained market deficit. And this is linked to the fact that the platinum market deficit is largely supply driven and strong demand is still lacking. So that has discouraged investors to invest in platinum. However, given this undersupplied market backdrop, other factors like its relative valuation against gold, which fell to a record low recently, and its lean investment position, and the forward curve has turned into backwardation and its thin liquidity together have pushed prices higher. And once the technical level was broken, more investment buying came in, which further amplified the price move.
So could you talk about what's happening with demand for platinum from the makers of catalytic converters, particularly for diesel engines?
Yes, so nearly 35 to 40% of platinum demand comes from catalytic converter, and platinum is primarily used in diesel vehicles than gasoline. So what we have seen is structurally a decline in platinum, which has started due to falling share of diesel vehicles in one of the key markets, and that's the European market. While in recent years, platinum autocatalytic converter demand benefited from a substitution from palladium to platinum because palladium prices were trading at a higher premium than platinum. And then there were some strict emission regulation in the key markets that also helped platinum demand to gain some ground. However, this year we are seeing some challenges because first auto production and sales are facing some challenge due to tariffs, and platinum is now trading at 18 to 20% premium over palladium. And the other challenge for platinum demand is also coming from rising EV penetration, especially in the Chinese market. So overall, we are not seeing, much demand growth coming from the auto sector. And we estimate that the overall demand for auto catalysts for platinum, I think it's going to contract by 5 to 6% in 2025.
And what about demand for jewellery, for using platinum in jewellery, which means it must have some sort of relationship with gold?
So gold and platinum both are precious, and platinum is more rare than gold, and both are used in jewelry. So the price ratio of these two metals should normally drive a substitution. Having said that, that has not been the case for past 1 decade when platinum price premium to gold actually flipped into discount. And in fact, platinum jewelry demand has seen a persistent decline since 2013 or 2014. An average decline has been in the range of 3 to 4% so far. So now when jewelry demand is also considered as a quasi-investment, it's also a symbol of prestige symbol. So gold will always be preferred in key markets like China and India. Apart from that, there is a technical aspect that platinum jewelry is having your higher making charges than gold, and not every jeweler can make platinum jewelry like gold.
And so we've seen this jump in the price. Do you think it's overdone now?
While we acknowledge that fundamentals are supportive as deficit market will continue to draw inventories, but a sharp price rise in 30% in just 1 month and more than 50% so far, I think makes us cautious that there could be some profit booking at this level because there are some technical changes in the market, but fundamentals still remain same. So we expect that investors will start liquidating their positions, and I think they have already started liquidating their holdings, especially in ETF. We saw a sharp fall, and we expect prices to normalize towards 1,250 level.
Soni Kumari there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Friday, July the 18th. Catch you next week with a look ahead to New Zealand's June quarter inflation figures on Monday and minutes from the Reserve Bank of Australia's meeting in July. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.